Just a couple days ago, one of SoFi's biggest bears, Wedbush analyst David Cavarini, came out and is actually turning more bullish on SoFi. Remember, this is the person who in March gave SoFi an under $3 per share price target, and immediately following that price target, SoFi went on a run up from $4 per share all the way up to $12, where it peaked after the earnings report in Q2 in the end of July. And as we head into Q3 earnings for SoFi, David Cavarini is coming out of the woodwork, changing his stance on the company, upgrading it from underperform rating to a neutral rating, and actually giving some interesting insights for 2024, which we're going to dive into in this video, along with a whole bunch of other pieces of news that SoFi had this week. So for the past couple of weeks, I've been doing a weekly recap for all the SoFi news that I've been seeing to prepare for the SoFi Weekly podcast on Fridays. Unfortunately, this week I wasn't able to get to it on Friday. So a couple of these news pieces we talked about on the SoFi Weekly podcast, but there's a couple of news pieces that we did not talk about in the SoFi Weekly podcast. So I figured I would wrap everything up into a video on Sunday. So let's start off with the stock performance. SoFi was up 4% this week over the past 5 days, rising aggressively into Wednesday, about 11% gain before giving part of it back towards the end of the week and closing off around $8.12 per share. Now let's start off with the David Cavarini news. That came out on Thursday in a report that Wedbush put out. I was tagged in this on Friday. And by the way, thanks to everybody who tags me for these pieces of SoFi news. Chances are I'll probably incorporate them into a video or a post on X, something to that effect, or maybe the SoFi Weekly podcast, and try to amplify that news as much as possible. So it makes it definitely really helpful when people start tagging me in SoFi related content, because it helps me to aggregate more information to then share out in this medium as well. So I saw this news on Friday, and if we look at the press release, we can see that the Wedbush analyst upgraded their target from underperform to a neutral rating. Wedbush also issued estimates for SoFi's Q4 2024 earnings at 4 cents EPS. Now, this was a part that I found quite surprising, especially because this is Q4 2024. So this is not 2023. This is not 2 quarters away. It's actually 6 quarters away. Secondly, he changed the status to neutral, but actually lowered this Q4 2024 price target. It used to be 5 cents EPS, and now he said they're going to come in at 4 cents EPS. And even this is absolutely wild to me, because 4 cents EPS is not a lot considering that we have 6 quarters to get there. Yes, it is positive EPS, but not by much, right? The note also highlighted the consensus estimate being 20 cents EPS for the whole year. And so if you divide 20 cents by 4 quarters, Q4 and Q1 are 2 of SoFi's strongest quarters. So it doesn't make sense for SoFi to come in at only 4 cents positive EPS if they're going to be profitable all throughout from Q4 of this year all the way to next year as well. So it seemed a little bearish from that perspective. I don't think Cavarini changed his price target, but it's obviously bullish that SoFi is now getting upgrades from these traditional bears in the market, which is really good to see, right? Because very slowly SoFi has been converting skeptics along the way, has been converting people from bearish to bullish along the way through the power of their execution. And we want to continue to see that pan through, because more and more bear cases are deconstructed that way. We also had big bank earnings on Thursday and on Friday. All the big banks double beat. We had JP Morgan report, Wells Fargo, and Citibank. JP Morgan was down on originations. Some credit loss provisions from JP Morgan also suggested that the macroeconomic landscape is not as grim as people expect. All of this bodes really well for SoFi as we head towards the end of the year, because SoFi's bank division is very comparable to the likes of Wells Fargo, Citi, and JP Morgan, more so than like a Morgan Stanley or like a Credit Suisse or like investment banks in general, right? Just given how they operate. And so if all of these banks are double beating, then it obviously lends way to it being a favorable macro environment for SoFi to also be double beating and increasing their originations along the way, which ultimately leads me to touch on a little bit going into Q3. There's a couple of big numbers to look out for. I think home loan originations are going to be a big one. Obviously, the rate environment is not great, but I want to see the Wyndham acquisition ramp, as they dropped a hint, like a month-over-month number on Q2 to say Wyndham acquisition is already paying dividends for them. I want to see that trend continue into Q3. Obviously, student loans, as they resumed in October 1st. Now, this is going to be a super gradual ramp for student loans, as people are going to, push their repayment back Tanner mentioned on the SoFi Week podcast on Friday that he'd be happy with 800 million. And Chris Hager from Data Driven Investing later posted saying, quote, "I don't think SoFi is going to get a big bump on student loans until Q4. I'd be pleased with a $600 million plus in Q3. People are going to delay refinancing until the last possible moment, and they weren't required to start paying until Q4. The interest started accruing in September. The repayment started accruing in October. Q4, if you look at it, starts in October, right? So it's October, November, December for the fourth quarter. I don't know to the extent that people are going to be jumping the gun from an originations perspective in Q3. So we can expect the actual student loan number to be really ramping up in Q4, but not necessarily so much in Q3. Now, moving away from that, and just running through some of the news that we talked about on SoFi Weekly, but very briefly, Lending Club had 14% of their staff laid off. They released preliminary earnings. They basically flashing some warning signs that their business is not going to be as strong as it is going forward. And I think this is good for SoFi because it decouples further this idea that SoFi and Lending Club should be trading in a pair or in a bucket. Because they're very different companies, right? We've seen several quarters ago a decoupling happen from an originations perspective where Lending Club was actually decreasing in terms of originations and SoFi was increasing in terms of originations. And now you're seeing the secondary byproducts of that with regards to Lending Club not seeing as strong a momentum, actually having to lay off people in this macro environment, and SoFi actually continuing to accelerate their growth into that profitability. Obviously, Lending Club is down quite significantly. Lending Club doesn't have the brand value that SoFi has from a marketing perspective. They don't have the appeal with that target demographic that SoFi has. And quite frankly, Lending Club doesn't really have the credit worthiness in terms of the quality of borrowers that SoFi has. And all of those factors contribute to the discrepancy. And it's good for SoFi because as we go forward, we don't want to be in the same breath as Lending Club when people are talking about us, right? Like, we don't want to be essentially put into the same bucket when people are making an investment to say SoFi or Lending Club or so on and so forth, right? I would rather SoFi be put in with the legacy banks and how they do rather than with Lending Club, even though it is a fintech essentially. Okay, moving on to the next piece of news, SoFi's 1% IRA matching. We talked about this a little bit on Friday, obviously very bullish. Not a lot of places do IRA matching, so if it is between SoFi and another institution that doesn't do IRA matching, this can be a huge advantage. Basically what this is if you put away money for retirement, your employer might give you a certain percentage of matching on your retirement amount, so up to 5% or 6%. SoFi themselves is going to give you 1% matching on your IRA. And I'm not sure necessarily to what extent SoFi can benefit from these funds. If they can borrow against securities, then that can be very positive as well from a unit economics perspective for SoFi. In other words, I can put my money with SoFi and get a kickback, get 1%, and then SoFi can leverage that money to make more money for them. However, if this is just a parking lot for cash that SoFi can't access or leverage or borrow against, then this is going to be something that's going to be draining from SoFi's coffers to continuously pay off this benefit. Now, there are restrictions to this. I was reading that there was a restriction of, I think, 7,000 or 7,500 deposit limit for 1%, and you actually can't take the money out for 2 years. But when you think of that benefit and how enticing it is to move people away from other institutions, it's not really that enticing, right? Because obviously, you want an IRA match over the long term because that money will compound even further the more you deposit, sure. But to move me away from, let's say, a JP Morgan or a TD or whatever I'm using, 1% of $7,000, that's my deposit limit, is $70. Right? And that's not that exciting. If you think about that, I'm not going to be moving all of my retirement assets from one institution to another for $70 benefit. But it's that $70 per year, essentially, that SoFi is giving you for free when you max out that deposit limit each year. So I don't necessarily think it's going to be a huge needle mover from people moving from one financial institution over to SoFi just to capitalize on that $70. But I do think that it's a nice to have for people that are already thinking of retirement planning and are already in the SoFi ecosystem. So moving forward to the tech platform, Galileo received Mastercard certification in Latin America. This is basically the equivalent of the Visa Ready certification from a Mastercard perspective. It just allows Galileo to be in that Mastercard network and Mastercard to acknowledge Galileo as a partner when referencing out different pieces of work. I mean, Tanner had a point in the SoFi Weekly podcast to say that, we haven't really had any clients be directly attributable to the Visa Ready certification. And so while this is a nice to have, again, it's not going to be a huge needle mover for SoFi. It's just further strengthening that partnership or that relationship with MasterCard to be in their certification program for Latin America. Now, one thing that we did not talk about in the SoFi Weekly podcast was the DBRS Morningstar confirming its credit rating on SoFi Consumer Loan Program. So Morningstar basically had a AAA rating on SoFi's consumer loans, and on October 12th they came out and they confirmed that credit rating, basically just reiterating the criteria by which they rate these loans and the strength of SoFi's loans. And this is obviously good because that AAA rating on SoFi's loan book has positive implications for not only investor confidence, but also potentially improved borrowing terms for SoFi in general, and just reiterates the quality of SoFi's borrowers and the quality of SoFi's loans that they hold. And remember, SoFi is going to come to a point in the next couple of quarters where they're going to be forced to offload more of those loans off their books. So this is really a timely reiteration as well. But I mean, we already had that AAA rating. This is just them reinforcing the same message, which is good to see. And just as a reminder, I was also tagged on this on X. Anthony Noto has promised that SoFi will be a top 10 financial institution. It's only a matter of time, when, not if, essentially. Here's a list of the top 10 financial institutions in this post that I was tagged in. At the current market cap, SoFi would need to 12x to achieve that promise. Now, obviously, Anthony Noto didn't provide a timeline or a blueprint as to how or when they're going to achieve that status, but he said that it's pretty much foregone conclusion in his mind that they are going to achieve that status. So it could be a matter of in the next 10 years, by 2033 or something to that effect, that SoFi can be a top 10 financial institution. And while that seems very far away, thinking of it as a 12x in terms of the multiple expansion or the improvement for that stock going from $8 a share all the way to $100 a share is a big deal, right? So that is a really lucrative investment to make, and ultimately that's a reiteration of that long term. But that's obviously very far out in the future. Over the next week or so, I'm going to be looking at the numbers as we go into Q3 and releasing some Q3 estimates of my own, some forecasts, some ideas of where my head's at with regards to Q3, and obviously releasing more SoFi news in a weekly cadence as I've been doing over the past several weeks. For right now, this is the Fundamentals Investing Podcast. I hope you enjoyed this video. Keep tagging me on SoFi News on Twitter. Thank you so much for listening.